This is the 7th installment to the series entitled Build Your Business into an Asset of Value. Our goals can only be reached through the vehicle of a plan in which we must fervently believe and upon which we must vigorously act. There is no other route to success. You have a clearly defined strategy to create value from which you derived a compelling value proposition. You identified a relevant market of prospective customers, crafted a coherent strategy of how you will engage with customers, and selected effective channels through which to deliver your products or services. You have a clear understanding of how and from where your business will collect sales revenues. Now, you must plan the mechanics of your business and determine what resources will be needed to deliver your products or services. The cost side of the business model canvas consists of 4 components: key activities, key resources, key partners, and the cost structure. Key activities. In the previous chapter, I addressed the revenue streams of the business. Revenues are derived from sales of products and services. Now, you must design a system consisting of core and ancillary processes made up of tasks or activities to produce your products or deliver your services. A business, in simple terms, may be thought of as an organization or system of people, processes, and policies. People with the right skills to do the work. Processes, perfected methods of producing products or delivering services. And policies, the rules that govern people's behavior within the business. Start by identifying and mapping out the core processes required to produce the products or deliver the services of the business. Processes consist of individual tasks, most of which must be completed in sequence, but some are completed on their own. An example, the core processes of a wholesale business may include procurement of inventory from suppliers, inventory management, and distribution of consignments of stock to customers. Next, identify and map out the ancillary processes required to support the core processes of the business. An example, ancillary processes of a wholesale business may include financial vetting of suppliers, payment of supplier invoices, and collecting sales revenues from customers. Now, you must identify and map out the individual tasks required for each of your business's core and ancillary processes. Here's an example. Individual tasks for a core process of a wholesale business. The core process is procurement of inventory from suppliers. The tasks: request quotation for stock from different suppliers, obtain approval from line manager to place an order with a selected supplier, place order and confirm order with supplier, receive delivery from supplier, and lastly, inform the finance department of receipt of the delivery of stock. Next, we come to key resources. For most businesses across most industries, people are the most important and costly resource. Having mapped out the individual tasks making up the core and ancillary processes, you are able to create roles. Example, roles for a wholesale business may include a finance role, a role for procurement and inventory, sales and marketing, and human resources. Next, you assign the tasks making up each process, which you identified in the previous step, to the roles. Example, tasks for the role of a human resources manager may include recruitment and selection of staff, remuneration, industrial relations, and training and development. Next, you must identify what other resources the business needs for its core and ancillary processes. Take note, I'm not yet talking about what capital the business needs. I will address that a little later. Here's an example. Resources required by a wholesale business may include information technology, including hardware and software, furniture, including seating, desks and shelving, and vehicles, including forklifts and delivery vehicles. The next component making up the cost side of the business model canvas is key partners. All businesses operate within a larger commercial context, which necessitate fostering relationships with key strategic partners. In Chapter 3, I argued that a business must craft a strategy to create value on 3 levels: value for customers, value for shareholders, and value for strategic partners or suppliers. A business that fails to create value for any one of these stakeholders will falter. Recently, I had a conversation with an executive of an IT consulting firm. The business consults on, source and implement enterprise resource planning software for large corporations. Over time, the business created much value for customers and developed a strong reputation in the field. Shareholders likewise benefit from ever-increasing profits. But the main software developer, the supplier, felt left out and became increasingly resentful of the large profits earned by the consulting business. Then the supplier decided to withdraw their software licensing agreement. At once, close to 80% of the annuity income earned by the consulting business was lost. 2 lessons can be learned from this experience. The consulting business became overly dependent on one supplier, and the supplier perceived the value created by the consulting business of insufficient worth to continue this relationship. It is essential that a business not only identifies key strategic partners, but also invest time and resources to fully understand the aspirations and fears of strategic partners. Strategic partners may include suppliers, service providers, contractors, labor unions, regulators, and financiers. Now we come to the last component of the cost side of the business model canvas, namely the cost structure of your business. By now, you know what activities must be performed, by whom, with what resources, and in conjunction with which strategic partners. With this information, you can now craft the cost structure of your business. I recommend you use the format of the cash flow statement as a template for this exercise. Overheads, operational expenses, are business expenses not related to trading activities. These are expenses that the business incurs regardless of the volume of goods produced or services delivered. Operational expenses can be fixed or variable and may include salaries, telephone expenses, insurance, utilities, rent to a landlord, and interest or finance charges. Total overheads, operational expenses, represent the low water mark for profitability. At minimum, a business must generate gross profits of sufficient value to provide for overheads. Gross profit. Gross profit equals sales minus cost of sales. A business engages in trading activities, including procurement of raw materials or stock, promotion and sale of products or services, and collection of sales revenues. The objective of trading is to make a gross profit of sufficient value to provide for overheads, fund trading activities, provide for the acquisition of operational assets, and generate net profits for shareholders. A gross profit of less than 30% is regarded as thin and is likely to be a cause of concern for financiers and investors alike. A need for capital. Earlier in this chapter, I addressed the key resources the business needs to produce its products or deliver its services. At both the outset and throughout the life of the business needs capital to acquire fixed assets, which may include equipment and machinery, vehicles, and furniture. Cash flow needs. Cash flow to a business is like oil to an engine. The cash flow statements start and end with cash reserves opening and closing balances. With this information, the business owner can predict how much cash the business will need at what point in time to fund trading activities, cover overheads, and provide for the acquisition of operational assets. In conclusion, business owners often come from a background in sales or marketing. As a result, the revenue side resonates more with entrepreneurs than the cost side of the business model canvas. But profitability is a function of both revenues and cost. It is much easier to control costs than to generate sales. Thank you for watching. Access the full series. Visit Constructum Online Learning on YouTube or click on the link in the post.